Subtle skills, big results.
Welcome to the Ninja Selling Podcast.
Hello, ninjas. Welcome back to another fantastic episode of the Ninja Selling Podcast. Hope that you are doing some amazing things today, whether you're out on a walk, you're off on a drive, or you're just folding some laundry. Hopefully, this is going to make those activities even more enjoyable for you. Garrett and Matt are here, and we have kind of a punchy topic today, a little bit. And before we roll into that, just a quick reminder, join our community because it is amazing. Facebook.com/group/the Ninja Selling Podcast. That wasn't very much of a description of why, just joining because it's amazing. I mean, I'm going to leave it at that, Garrett. I think that's good enough. And if you guys want to learn anything more about ninja selling, if you're new to the show, if you're new to Ninja, head over to ninjaselling.com and highly recommend picking up a copy of the book. If for those of you who don't know, Larry Kendall did write the book, Ninja Selling, back in 2017, after Ninja's been around for a long, long time. The book has everything that you need to know about Ninja. It has the systems, it has the philosophy, it has a story about Garrett getting pulled over by the police.
I am in the book. I did make that. I was not driving, though. I was in the back seat. Keep going, Matt.
That's true. It's true. You weren't driving. So anyway, get the book if you have not read that. So, Garrett, hello.
Hi, sir. How are you today?
You can tell I had some caffeine this morning.
I have not had as much as you, but I haven't been awake as long. So I'm playing catch up. I'm just behind just a little bit. Investment.
Yes. So great topic today.
Yeah, Matt, you brought this up. It goes to a point that Larry and I have had lots of conversations on over the years about what is a true investment and is our home an investment, our primary residence an investment, and how should we talk to our clients about it, and how should we be educating our people and how ourselves too, personally. How should we look at our own house? Is it an investment or is it a liability? So Matt, you brought this up and I think it's great because we're starting to see agents really supporting this idea of your home as an investment. You should buy a house because it's a great investment, which can be kind of a dangerous area to kind of get into there for many, many, many reasons. So Matt, I'm excited to go down this path with you today.
Me too. And the reason why I was thinking about this is I'm just seeing more agents out there start to use this language again on both sides, from the buy side and the sell side as well. Like, how do I get people to sell? They're sitting on all this money. What a great investment that they have here. They could cash out. They're missing a point there, which we'll get to. And then on the same side for buyers, like, hey, you should move now. Like, imagine if you moved a year ago, what that investment would have turned into. If you move now, like, the appreciation is going to be there. And what I'm not saying is that we shouldn't talk about the financial advantages of buying, selling, doing whatever with real estate, but to start leaning into encouraging people because it's a quote, good investment. One, we don't know if it is for them because we don't know their whole financial and investment strategy. And two, it's not going to pay them. I mean, that's one of the things that everyone who is big in real estate investing will say is a real estate investment is something that actually pays you. And if it is your primary resident, you are paying it. You are spending money every month on interest, on taxes, on maintenance, on all the things. Now, that might be more financially smart than renting. It could be, it could not be, but that doesn't make it a quote investment, right? And that's where I want people to be very, very careful with their language.
I think that there's always particular marketplaces that will show up, Matt, where it is an advantage to move up. Like you can buy more by moving up. Every once in a while, those marketplaces will happen where it's like, no, you should sell and move up right now because you can buy a whole lot more home in the upper price ranges with what you have in equity and all that. Every once in a while, it shows up. But in general, you bring up a great point, and I know you want to talk about this, and I'm maybe not yet, but we're going to. I think it's really interesting, that mindset of like, you should pull your equity out because you've made so much money on this house and go buy something else. And once you're in the market, like you're in the market, it's not like I'm going to put my money there and it's going to be worth more later. It's no, our money's in it. It's rolling with it. So if I sell this property, pull all this money out, I need to use that money to go buy the next property that I want to buy. It's not like I just get to pocket it and all of a sudden I get this more expensive property and it's like, okay, we're good. We've made all this money right now. It's a misunderstanding that a lot of people have. And I think there's a lot of realtors out there. I hear it all the time with people that I coach. They've made $1 million on that property. Like that home's made them rich. since they've bought it. They should pull that money out and go move. The only reason that they're going to make money on that is that they sell it and they move to Juneau, Alaska. Sorry, Juneau. I know you have very nice properties up there, but that's an opportunity to be able to say, yeah, we're moving off the grid. We're going to go buy a shack and live on the side of the river and be great.
Sounds actually pretty cool.
And yeah, the winters will be cold, but we're going to pull our money out. And now you've made money, but not moving just to move for the sake of pulling money out to buy a house, another one across town. That doesn't work that way.
No, it doesn't. And I mean, yes, there are some arbitrage opportunities, but that again doesn't qualify it as an investment strategy. That's just taking advantage of a market condition to better a lifestyle or to enhance your living situation, right? And what I'm hearing from many people is, what do I say to people who say, like, yeah, I know I could make a lot of money if I sell right now? Like, how do I get them to then take the next step? It's like, well, do they want to sell? Are you talking to them? Are you focused on the money? Are you keeping them focused on the money? Or are we coming to life change? Are we coming to the reasons why people actually buy and sell their primary residence? Now, money could be a reason why people buy and sell, but it's typically not the value of the home as to why they buy and sell. It has to do with maybe their other income. If somebody gets a major job promotion or they get a massive bonus, yes, that money situation might cause the desire to say, hey, let's go buy a more expensive home. But rarely, unless there's these arbitrage opportunities, do we see people say, hey, everything else is the same. And particularly in this market right now with inflation and all this stuff, who wants to trade a 3% rate for a 5% rate if their cash flow is not the same, right? Or if their cash flow is the same, but then that new 5% and more expensive mortgage payment then hurts their cash flow. The pure financial decision of that just doesn't make sense to me. And I don't know why we're telling people it's an investment.
Well, this goes back to, I think, why we have a lot of people that are kind of like mudding up our hot list right now, that are just kind of like, oh, if the right home shows up, we'll make a move. Well, they are looking at their home as like, well, we've made all this money on it. We could never afford a $1.5 million house before, but now we can. But you're also selling a $1.5 million house. Like, you couldn't buy it before because you qualified for a $100,000 house, and now everything's gone up. So I think it's kind of one of those misleading things that we have as a conversation with somebody, is like this money you've made out of it. It just transfers directly across. So going back to this idea of the investment, Matt, and looking at your home as an investment, we had this happen back in 2005, 2006. We had a lot of realtors. I was in those markets. I was selling during this time. And we had a lot of realtors that got themselves into a lot of hot water because they sold a ton of homes going like, wow, look at the investment. This is an investment in your family. Well, the market shifted. It shifted because the bank loans went sideways. So all of a sudden, 2008, 2009, 2010, 2011, all these realtors that sold this vision of this amazing investment. This is why you're a homeowner, because it's an amazing investment. You're always going to make money on. Look at how much money these people made last year on this property. All of a sudden, they have these clients that are looking at them and saying, what'd you do to my family? You told me this was an investment. You said, your words, this was an investment. And this was the worst investment I ever made in all of my career. Like all the money I've ever spent, worst investment ever. This is what happened in 2008, 9, and 10. And what Larry came to me at that point in time, he's like, we've got to get these people to stop referring to primary residence as an investment. This is a roof over their head. And Matt, as you've said, I'm not sure if you said it during since we hit record, but maybe before, is like, it could make you some money. It could all of a sudden be a huge financial reward in your world. It also may not be. It's the value of being a homeowner and having this home that you own that you can do anything to, that you know is yours, whether you have to hold it for an extra couple years to make it so that it actually can break even before you need to sell it. I've had to do that with a property, Matt. I had to sit on a property for 3 years just going like, we're going to have to wait this one out, because if I were to sell it right now, horrible investment. Horrible investment if I was to look at it in that way. Thing was worth half the amount of when I bought it if I were to sell it at a certain point. And I would look at it as like worst investment I ever made. At the end of the day, we held it for 3 more years, collected rent on it for 3 more years, and then sold it for a $50,000 gain in sales price. Well, it's a good investment at that point. It was my home. That's where people need to look at it. It's like, it was my primary residence. It wasn't about making money. I just happened to work out that way. different than investment properties, true investment properties.
And I think this is why people should drop the term investment when they're talking to primary residences. Because when you go buy an investment property, you're running all the numbers. You're looking at the cost of buying, you're looking at the cost of carry, you're looking at the cost of selling in the future, right? When agents are out there telling people about, oh, the investment and the appreciation that you get, they're not factoring in the cost of carry. They're not factoring in the cost of buying. They're not factoring in the cost of selling. That's where people most get surprised. Like, oh, that 6-7% that now I have to pay out to all these people when I go sell the house. Oh, that's eating into this 10% appreciation that I just had. Yeah, it is. Plus all the maintenance and different things that you spent on the home when you moved in and living there. So it changes people's mindset. And I think this is what happened in the early 2000s as well, is when you start to talk to people about investment, they start to think, oh, well, I could take on a little risk, particularly those hardy people.
That's a really good point you just said. I can take on some risk with this because it's a good investment, because the numbers are working right now. Wow. I've said this many times, and I know I totally interrupted you, so I'll let you go back to where you're at. But when I look at like really successful investors that I've seen over the years, most of them do not buy based off of appreciation potential. They buy based off of cash flow. I buy mine based off of cash flow. I really don't care what the appreciation is going to do. Appreciation is this crazy bonus that you get to have every once in a while. But your comment you just said of like, I can afford to take on some risk with a primary residence, that's where it gets scary. That's where if the marketplace shifts and whatnot, now you're sitting there going, uh-oh, we now have a problem. I overextended myself. We took too much risk on, and now we got to figure out what to do with this thing. I want to also be real clear, Matt. We are not saying that the marketplace is going to change. We're not saying that the appreciation is going to shift and go a different direction, and people are going to be sitting there going, oh my gosh, what'd I do?
No, I think it's actually going to keep going up personally, but that's just my personal opinion.
Just talking about the word investment and being careful about how we're talking with our people.
I think it's okay to say if people are trying to weigh their decision of buying, selling, trading up, renting, you can talk about what might be financially beneficial to their own personal cash flow, bring their financial advisor in on this, and talk to them about the financial responsibility versus the investment opportunity. I think this is also when we start talking to people about, well, what are the things that I can do to my house that are going to get me the best return on that investment, which maybe is a slightly different conversation. But at the same time, when you look at the numbers and people get confused, like, wait, so the best thing I can do to my house, this was a report from several years ago, but garage door, fireplace, get me like 101%. And then everything else is like in the 9, but that's below 100% return. Like I'm not getting all my money back. Like, I don't understand. How is that a good investment? It's like, well, because you get to use it. That's not the whole point of doing the project. It's a project that you want to do for your private. Now, if it's a flip, different story.
I'm going to make some money here soon. I'm going to put a new garage door in my house.
Well, I tell you what, I put a new garage door on my garage, and I don't know if I'm going to get all the money out of it, but it was an expensive garage door.
You feel wealthier just putting it on your house?
I'm a lot more comfortable when I'm in my garage because it's insulated. And that was the reason why I did it. The other garage door I had was just fine. I actually asked if can I get some money for that garage door? Apparently not. I'm sure whoever took it away got some money for it somewhere.
A lot of scrap metal. You said like all the research you do when you're truly doing an investment, like buying a real investment, there are so many numbers that you look at. A true investor, and I know I'm repeating myself here, but a true investor in real estate doesn't sit there and go like, this is a great investment. Like, let's just buy. You break down so many different aspects of it. For a prime example, my daughter just got accepted to the University of Hawaii. We are like, we should take a look at buying a little fourplex or something out there, something close to school. They can rent out. We can make sure that they have, student housing or whatnot. And just starting to take a look at that. And it's funny because I am looking at it as an investment potential. And I was talking to my realtor and she's just throwing out numbers. And she like throws out this $550 maintenance and fee and whatnot. And I was like, oh, annually? As I'm taking notes. She goes, no, that's monthly. She just kind of like skirts over it. I'm like, whoa, wait. Let's go back to that number. I said, is that just this property? She goes, no, that's part of buying anything in Hawaii. And there's a bigger conversation that went down with it. But all of a sudden, like I'm having to factor that into if we're going to do this, I now have a $6,000 a year expense that I was not planning on. I was like, out of all of the investments that I own, I don't have that in other properties in other states that I own homes in. That's an investing side of looking at it. On the flip side, and I think this is worthy to share because I have a good friend that he's bought and sold 4 homes in 2020. And he made something like over $650,000 in income that he made out of these shifts of these properties. I think the funny thing and the important thing to look at is that it was an accident. The $650,000 was a pure accident. He didn't go into it as I'm going to invest and make this money through this marketplace. It was this house isn't working for us. We need a new place. They bought another house in town that worked for them. They were like, wow, we don't want to live here anymore. We want to move out of the city. And they bought a house somewhere else and totally moved to a different area. Then they sold that house going like, this was great. This was our vacation house. We were thinking that we weren't going to have long term. And they bought more of a primary residence in this new area. At the end of the day, he's like, I made $650,000. That's amazing. But it wasn't in the investment mindset. And this is where if like you go into your primary residence banking on it being an investment, you can get yourself burned really quick on what should be your roof over your head.
Yeah, absolutely. If you want to bank on appreciation too, then you got to plan on living in that house until like your mortgage matures. And not many people do that for one. And two, why would you want your investment to hold back your life strategy? And so if you stop looking at your home as in quote investment, it doesn't hold you back from life. Now, that doesn't mean that there won't be times when it might be financially irresponsible or not financially helpful to sell and move. And you might use that as a reason to stay. And that's fine too. But if you're not looking at it as investment, it won't stress you out as much as a homeowner. At least that's the way I look at it, which makes me comfortable with my home and whatever we decide to do with it at some point, which the hope is keep everything forever, never sell. But in a normal market, like let's just use some numbers for example. So in a quote normal appreciating market, the average trends, right, about 3% a year nationwide if you look at the long-term data, right? So now we're talking about 2 years just to be able to break even on the costs of selling. Then you have to factor in, okay, well, what are my costs of buying? Let's add that. So we're now going to be over 2 years for a break even. Then we have to also add in all those costs of carry that we had, the taxes, the interest on those payments and everything. So we got to factor that stuff in. Oh, anything that we spent on the house over there. And all of a sudden the break even starts to get a little further out. And you could be 4 or 5 years just to break even on the money that you put in. Now it's like, all right. And then the slow growth to having profit. This is assuming the appreciation trend continues as well, right? You're better off putting money in the stock market then at that point, on average, right? So be careful what we're calling investments, I guess is really, if I haven't made that point clear.
The biggest takeaway that I got out of what you said today, Matt, is people are, and I'm not going to say it right now, but taking on more risk. And that right there is where it gets dangerous. And I think it's a subconscious thing that kind of happens. I think they start looking at it as like, well, we can push ourselves farther because we're going to have this appreciation. And there's a lot of people that are going like, well, we can make this, we'll step up and do these crazy things because of the appreciation. And it's a good investment still. And the minute that turns into, we can take a higher risk because there's a good investment side to this right now. Just be really careful on how we're educating our clients, how you personally are looking at your homes out there, because I find that that's typically where people can overextend themselves fairly quickly. And then you're house poor.
Oh, it was just like the worst thing in the world. Wouldn't that be so exciting to come home every day and hate the house that you live in because it's making you broke?
Just walk around knowing that it's just painful every single time you got to make a payment. And you're just like, but we have a house.
Yeah. Yeah.
House poor. We've all been there, haven't we?
We're not going to be house poor. You're not going to be house poor. Your clients are not going to be house poor because you guys are ninjas. You guys are ninjas. And here's the other thing. Your clients make the decisions anyway. Let them make the decisions. You guide them. You follow the process.
You're just giving them the information so they can make smart decisions and move forward. And again, I don't think, Matt, I think the biggest thing to look at this, we're not telling you to talk them out of buying in this marketplace.
No, not at all.
Oh, and I will share this. And I don't know if I said this. This will make your real estate reviews also easier depending on what happens within the marketplace. When you sit down with them in a year, If you have set them up as your home as an investment and you come back in a year and you want to sit down with them, the chances of them saying, this wasn't a good investment, what did you do to my family? If it were to happen, now it's on you because you set it up as an investment or you didn't educate them properly when they were purchasing. If you take the investment side out of it and appreciation's a bonus and who knows what's going to happen, now you're their trusted advisor sitting down with them and explaining the market and looking where the marketplace is sitting right now. It will dynamically change your relationships with your clients depending on what happens in the future. And we've already been there. We've already watched this happen. I've already seen it, already been through the market. I watched the agents that sold it as an investment, and I watched the agents that sold it as a primary residence and a roof over your head and the house where you're going to make memories in. It will change your relationships with your clients if for some reason the market does do something weird.
And their experience in their home as well, in a good way.
Yes.
It actually makes them even more excited when there's a huge appreciation game because like, this is amazing, right? Versus, oh, well, that's what should have happened. This is an investment. It's just also a nice way to like keep expectations nice and low and over deliver on the value as a trusted advisor. So if anything, look at it from that standpoint. Your clients will be even happier with you because everything is a bonus.
Bonus money. All right, Matt. So great topic. I'm happy you brought this table. I'm not leaving anything unsaid, right?
I don't think so. Yeah.
Perfect. Well, I want to say thank you to everybody for joining us today. Matt definitely had more coffee than I did this morning. I was not keeping pace with Matt, I don't think. So I will do better next time.
I haven't been drinking coffee, actually. And then this morning, pre-workout and coffee. So it was like, hey, haven't seen you in a while.
My daughter's been using pre-workout and I think it's like 300 milligrams of caffeine. And I was like, is that the same as the protein stuff I've been using? They're like, no, it's not. And do not mix it with your tea in the morning. Like you will be off the wall. I'm like, maybe I should try that. They're like, do not try it. So thank you everybody for joining us. We appreciate you all. If you haven't gone and checked it out, go to the Facebook group, the Ninja Selling Podcast community. Is it community? Ninja Selling Podcast.
Just the Ninja Selling Podcast.
Go join that group if you haven't yet. There's an amazing group in there. We are inching up on 8,000 people in that group, and I'm so excited to see it continue to grow, continue to be a powerful, positive influence for people. If you want to know more about ninja selling, as Matt said earlier, there's the book that you can go purchase. There's also the Audible book you can check out, which will help you get a deep understanding of what ninja selling is and where it came from and what it's doing. And then if you want to know more about installations, and installations are the 4-day class that will literally install Ninja into your world. It's an amazing setup that Larry Kendall created. It'll help you get the deep understanding of what Ninja's about. We have people that go back to it year after year after year because it makes such a big impact in their life. So if you want to go check that out, ninjaselling.com. There are open events on there. That's it. I appreciate everybody. Thank you so much for joining us today.
Thanks, everyone. Have an amazing day.
If you enjoyed today's episode and would like more, visit us at theninjasellingpodcast.com.
There you will also find links for more information about ninja selling and coaching. Have an incredible day.